Hello, everyone. Welcome to this week's webinar on planning for new court reporters. Today, we're going to talk about 5 most important financial moves that you should be making as a new court reporter to make sure that you're setting yourself up for success. So let me pull up the presentation and we can dive right in. Of course, if you have any questions, feel free to leave those in the live comments, or if you're watching this after the fact, you can comment on the video and I'll make sure to get them answered for you. So for today's presentation, I want to first talk about why it's important that we start with financial planning right out of the get-go when you become a court reporter. And one of the big reasons is that you now have to do everything on your own. Maybe you were with another company previously and you had W-2 income, you had 401k and some of those benefits. And a lot of our freelancers, you now have to do everything on your own. So we don't have that predictable income that you've maybe had in the past. And now we have to make sure that we're doing all the right things and staying organized. I know a lot of people don't like to think about it as court reporters. They just want to focus on doing their job and doing it well. But at the end of the day, you are a business owner as well. And so we do need to put that business owner hat on and make sure that we're taking advantage and keeping organized of all these business expenses and tracking and everything that we need to stay on top of as a business owner. So sometimes we need to kind of get off the roller coaster of actually doing your court reporting job that you went to school for and focus on some of the financial planning and the business side of things as well. Also, I noticed that with court reporters, there's good months and bad months, and you need to make sure you have a game plan around that. So handling the fluctuating income is an important piece of being a court reporter. Also, some of the early habits that you develop will stick for the long term. So we need to make sure that you're doing all of the right things and you're focused on the right areas of your financial plan. I think a lot of times people just focus on bringing in income, which is obviously the most important, but things get thrown to the wayside after that. One thing I do notice with a lot of court reporters is because they have to do everything on their own. And again, you start making some money, maybe you had bills or debt that had built up while you were working to get up to speed. And so now you're focused on some of those other pieces. And then eventually you just completely forget or stop focusing on your finances and you don't put anything away for your retirement or for your future, and you end up starting way too late. So hopefully if you take away anything from this presentation today, it's get started on your financial planning as soon as you can to make sure that you're putting those pieces in place. Even if you're starting out $50 a month to some of these accounts and pieces of your plan, it'll just start those habits where in the future you just increase what you're already doing. You don't have to get everything set up and you got it done early and got it put in place. So step number 1 is going to be opening 3 bank accounts. You probably already have one of the 3, but you need to make sure you at least have the other 2. So the first one is going to be your business checking account. I think a lot of people get confused here where they think that they need to actually have an account that has the word business in it from a bank. You actually don't even need to do that extra step. All you need to do is have a bank account that you're only going to use for business income and business expenses. So really the big differentiator here is just separating your business income and expenses. It's not actually having a business type account. Obviously, that can be a little bit nicer to have that business on the credit card or on the checking account, debit card, and things like that. But it's really not necessary as long as you just have your finances separated. So have a business dedicated checking account. Next, I would look at having a tax savings account. So somewhere where you can transfer, either if you wanted to do every time you get paid, you transfer 25% to start with, or if you wanted to do like a certain amount per month, whatever works for you, but just have an account that you're going to set aside money for taxes and don't wait till the last minute, especially if you're new and you start bringing that income coming in the door. There's a lot more of that goes to taxes than you think. So make sure you're setting aside a decent chunk of that income toward taxes. And in a best case scenario, you oversaved and now you just have more money to either work for your financial plan, your business savings accounts, or vacation or something else, right? We'd rather over prepare than under prepare. The last bucket's just going to be your personal checking account. So you probably already have this set up, but just going to be the money that is going into your personal account from your business. And your personal account should only receive money from your business account. You shouldn't be getting any of your jobs paid out to you there. No business expenses from your personal debit card. Again, keep that as separated as you possibly can. Number two is going to be tracking every dollar for 30 days. So as you've gotten all these different tools, subscriptions, software set up, everything like that, you have all your personal expenses. We need to know what's coming in the door and what's going to be going out in the future. So we need to figure out what does it actually cost you, number one, to run your life on the personal side, but then number two, with the business side as well. So just get the lay of the land on your financial picture and what life's going to look like going forward. So you can use like a tool like Mint was a popular one, or YNAB, or even just tracking it on a spreadsheet, maybe looking at it once a week and just putting down all of your expenses and categorizing it. But just do it somewhere that you can keep track for the next 30 days. And that leads into number three of setting what's your minimum monthly number. And a lot of my clients like this because they want to think about what's the minimum that I need to make each month to number one, be on track for my financial plan. But number two is just pay my basic expenses and make sure that those are covered as well. So we need to figure out what that number is by using that budget that you did over the last 30 days. And then we can figure out what is that income number that you need to hit. Add a 20% buffer because things are always coming up. There's always unexpected expenses or things that you only pay for once throughout the year or twice. Something like a property taxes is a common one, or annual subscriptions, things like that. We want to make sure we have an extra surplus for those random one-off expenses and then give you a little bit of breathing room when we do have slow months. And then also, if we can, if things are really going well out of the gates, then we can start focusing on another, call it 20% on top of that, that you can commit toward your financial plan. So personal expenses, your minimum amount, 20% of that as a buffer, another 20% of that as financial planning money that you can save on a monthly basis. Number four is going to be building your emergency fund. I have here just as a starter $5,000 emergency fund. That's a good place to start, but really as a court reporter, you need to have a lot more money than that because if you can't work, it's very easy for you to not be able to work. If you break your wrist or break a finger even, you could be out of work for an extended period of time. So you need a much bigger emergency fund than most people. I would usually recommend closer to 6 months to a year's worth of that monthly number that you just calculated on the third recommendation that I just gave. So figure out what that number is, multiply it by 6 or 12, depending on how worried you are, I guess, kind of your risk tolerance. And that's the number that we want to shoot for. But we need to start somewhere. So just get like your first $5,000 stashed away in your business account and really build that buffer. We've talked about it in other webinars, but you want to be able to pay yourself eventually a consistent monthly amount without having to worry about the fluctuations of the business. So you need to build up that emergency fund to a certain level where then you can just pay yourself every single month, and that buffer is going to be there to protect you. Number five, this is the last one because it is the first step toward financial planning and could be a little bit more work than some of the other steps I mentioned. But step five is going to be starting a retirement account. So there's so many different options to choose from between a solo 401k, SEP IRA, Roth IRA, and there's even more on top of that. Ideally, I would probably go with something like a traditional IRA or a Roth IRA if you're brand new to earning income and not sure what this year's going to look like. Just because it's a personal plan, very easy to set up. You can contribute up to $7,500 per year. And so it's a good starting point to get things going. And in the future, you can always add things like a solo 401k or a SEP IRA, which are business retirement accounts and are more complex but have much higher contribution limits. So start somewhere easy with a Roth or a traditional IRA. and then go from there. And the nice part is since those are personal plans, you can actually have that on top of a business plan. So let's say you start up a Roth IRA and you max it out for 2026, and then you realize, wow, I'm having a great year. I want to save even more toward retirement. You can still, for 2026, come back and do a solo 401k or a SEP IRA because those two plans don't interact with each other. You can max out both in the same year. So it also leaves that door open to make changes in the future as well. A bonus step here that I would recommend is find your money mentor. Of course, working with a financial planner, someone like me to help you with your financial planning is, I think, a big win, even starting early on when you maybe don't have a lot of assets, because there are just so many moving pieces that other traditional jobs don't have to deal with. So maybe someone who was like, say, out of college in their first job probably don't need a financial planner yet because they have everything organized through their employer and things are pretty easy at that point. But for a brand new court reporter, it still makes sense to work with someone like me because there are just so many extra moving pieces. But on top of that, I would recommend finding like a reporter that's 5+ years ahead. There's a lot of Facebook groups out there, LinkedIn as well, where you can find a mentor that's basically look at someone who has the career, or I would say even like the schedule that you like the most. So you can look at how often they're working, how much income they're bringing in, what's their experience level, and then you can reach out to them and try and emulate what they're doing. And I'm sure they'd be happy to help. So some of the common new reporter mistakes that you should be avoiding. Number one is spending every big check, especially if you've been without income for a while, or this is putting you in a much higher income level than you've been in the past. It can be very tempting that you start getting these big checks coming in and things are going really well, that you want to start spending it and enjoying all that work that you put in to get into this point. And you definitely should be having your fun. I always think that we want to make sure we're having fun today, but also still planning for the future. We don't have to be super boring and only be focusing on future planning. We can enjoy some of the income that we're earning today and have that balance. But very early on, you need to be careful about overspending here. And also, like I mentioned, there's a lot more money that needs to be paid toward taxes than I think people realize. And so making sure that you're well prepared for that first tax bill is going to be hugely important for you. And again, with that, number two on here is ignoring tax savings. If you just wait until April next year to see what taxes look like, it's going to be really tough for you, and you could be putting yourself in a hole that you're constantly trying to dig yourself out of. So again, you can pick a percentage if you don't know how much to save yet. Save 25% of what your income is every month. And you can even just send those quarterly tax payments to the government or really pay a tax payment whenever you want. The IRS is always happy to accept your money early before your taxes are due in April. And although some people are against that, I think if you're a new reporter, it just gets the money out of your account and out of your mind. And now it's locked in. That is for taxes. And you won't get that back unless you overpaid and you get that refund in April. So you're just prepaying those taxes and you're getting the money out of your account so you don't spend it or do something else with it. So I think although it is a free loan to the government from now until April next year when your taxes are due, I think it's worth it for just the sense of not spending it and not having that money available to you. Lastly is mixing personal and business expenses. If you're a sole proprietor, this is like just going to create more work for you, but it's not as big of a deal. But especially if you become an S corp, it gets very complicated when you need to be doing bookkeeping and tracking everything that's going on with your business, and you're constantly trying to show that you spent your business money on a personal expense, then your personal self reimbursed your business for that expense because it was a personal expense and not a business expense. It can just get really complicated where it's like personal money going into the business to pay off the credit card bill that you spent on personal stuff, and it just becomes this huge headache. So it's really important that you make sure you separate your personal and business expenses and try not to use the wrong credit cards and debit cards as much as possible. And it'll just make your life so much easier when it comes time for taxes. So, next 30 days, what can we do to take advantage of your new financial situation? Opening up those three bank accounts should be an easy week one task. I imagine 99% of you already have the personal account, so it's really two that we need to get set up. Number two is going to be tracking all those expenses and calculate your minimum monthly number. So get in the habit of calculating your business expenses and tracking that, but then also just seeing what it costs you to run your life with both personal and business going forwards. Week three, make your first $500 emergency fund transfer from your business account into your business savings account to really build both that savings for taxes, but also to have that kind of emergency fund buffer as well. And then week four, again, really only if everything is nice and organized and you feel confident with these first three items, then I would go to step four, which is setting up that retirement account. You can open that account and put $50 a month in. That's totally fine. Just opening the account and doing something is going to put you in that mindset where it's so easy going forward. I can just bump up my contributions over time. I have a big job. I can take 2 grand and just throw it into the Roth IRA and not have to worry about it. It's just going to make you focus on your finances so much more to have these buckets already established early on in your career. So that's everything I wanted to go over with you today. If you do have any other questions, like I mentioned, feel free to leave those in the comments and I'll get those answered. If you want to connect and talk about your personal financial situation and figure out a good game plan for you to implement over the next few months, then you can reach out to me. My email's down here at the bottom. Other than that, have a great rest of your week and I'll see you all next time.